Hi there, welcome to Kneppy Invest and welcome to February 11, 2025. We are 2 days before my mother's birthday, and last time I heard, she and my father are in Argentinian waters or somewhere like that. They were at Falklands Island, and then they went on a boat to see a glacier, one of the really massive glaciers. I don't know what it's named. They might be off the boat now. It was snowing at one point. They have been sending me some photos in a what do you call it, a WeChat group or something like that. And I'm not sure if they're off the boat now. And to be honest with you, I don't know what their itinerary is. So they could be heading home right now to celebrate my mother's birthday in Australia. And we should wish her a very happy 26th birthday. And of course, I'm joking, because if she's 26, I have not been born yet. Okay, so let's turn our attention to the ASX today. So the agenda, we'll go through what's happened, the best and worst performing sectors, indices, also companies. And of course, we're in February, which means reporting month. Companies are releasing the half-year and full-year results, and today is no different. Quite a few companies released their results today, including one of the biggest companies on the ASX, CSL. And I'll be honest, I was a little bit disappointed with their results, and I think the market was as well. Breville Group, I was actually quite pleased with their numbers, but I was a little bit disappointed with their outlook statement. I think it was EBIT growth expected for the full year. It was a little bit lower than I wished for. And the stock of the day, SGH, used to be called 7 Group. That company's results I thought were quite good, beat expectations. I've already recorded a video on that. The only thing missing there was revenue was slightly lower than expectations, and it wasn't that up that much, only like 2%. Other companies releasing results include Vulcan Steel, and what else? Vulcan Steel, a few REITs, including the Charter Hall Social Infrastructure REIT. And if I was picking a stock today based off share price movement, this company or this REIT would have been it. A little bit surprised, share price up 7%. And a few small companies also released their results, including Recon, which is an accounting firm. Okay, and a few other things I want to show you, including something from an article I read today. And I'll talk about that in a second. Now, in fact, I'll talk about that first, then I'll go to the earnings calendar, look at which companies are releasing their results tomorrow, Wednesday, the 12th of February, and that includes the biggest company on the ASX, CBA. And CBA's report, always a good read. Always a good read. I actually do read CBA's report. They do put some interesting stuff in there. So I'll spend a little bit of time on that report in tomorrow's video. So in fact, let's have a look at this nice little graph. I was looking at, this was in or via a Livewire markets article from, or something to do with Morgan's Stanley, not Morgan. No, I don't think it's Morgan Stanley, it's just Morgan's. And they had this ASX 200 12-month forward price earnings ratio. And what they're suggesting here is the forward PE ratio is a little bit stretched on the ASX. And yes, I do think the ASX is overvalued. Now, there are some companies in the ASX I think are undervalued. So definitely a stock picker's market. Interesting enough, when I almost completely sold out on the ASX in early 2020, and the whole reason was based off this chart. And at that point in time, the forward PE ratio was over 18, approaching 19. I thought, oh, look, I'd rather pay off my mortgage than have very small returns. I wasn't trading all that much at that point in time, and that's what I did. And then I bought back in a few months later because, as you can see, the forward PE ratio went all the way from 19 down to 12. And that was prime buying conditions. Now, after the COVID-19 financial panic, with that V-shaped recovery, the valuations of the ASX got really high. And that was because of stimulus, that sort of thing. People were willing to pay much more for companies because they thought good times would last forever. Of course, they didn't. And it wasn't that long ago, 2022, the PE ratio of the ASX was down or back down to 12 or 13. And again, that was prime buying time. And now it's rallied all the way back up to 18. So above 18 means it's historically high at this point in time. So again, ASX is overvalued based off this forward PE ratio thingy. So it's the ASX 200, by the way. And one of the reasons it is stretched is because of the banks, CBA, releasing the results tomorrow. So I can get rid of that. Now onto the earnings calendar, very important this time of year. And I do like TradingView. I took notice of this. So they got computer share wrong. They didn't release the results. But CSL, SGH, Breville, Region, I didn't see Centuria Capital, but Charter Hall Social Infrastructure did. Vulcan Steel did. Cettire didn't, but Seven West Media did. And most important thing is the reported earnings per share and revenue were imported into this particular page before market had opened. I was surprised with that. I came to my computer at 8:15 a.m. and a few of these were already filled in. And straight away, you can see that CSL and Breville Group earnings per share actually disappointed. I have a feeling Breville Group's revenue was a little bit more than forecast. Yeah, CSL definitely was a little bit disappointment, while SGH was a surprise, 6.3% earnings per share surprise. And you can see that reflected in the share price performance today. I didn't really pay any attention to Vulcan Steel. Everything was down big. And I didn't pay any attention to Region Group or Charter Hall Social Infrastructure. And maybe that was a mistake because, yes, CQE, that particular area, up a fair bit last time I looked. Okay, so let's have a look at the ASX today. And with about 40 minutes left of trading, little bit disappointed, I'm going to have to say. I thought maybe we might be up a little bit more, but tech up 0.94%. And the reason I'm a little bit disappointed is because, sure, the Nasdaq was up 1.24%. Dow Jones was up about 0.4%. So I thought maybe we'll be up 0.3 to 0.4, but relatively flat. And I'm a little bit surprised resources only up 0.07% because gold had an absolutely brilliant day. So maybe iron ores had a bad day, oil, other commodities have had a bad day. So let's delve into the ASX today. And we have seen the XAO and XYO drift lower through the day. Now, I wouldn't be surprised if the market or the XYO opened up about 0.4 to 0.5% and has been drifting lower all through the day. I don't think we do have a percentage change here. We could calculate it. But on the other hand, XTX is up and has been drifting up all through the day. And that's not a surprise because of the really good Nasdaq session on Wall Street. Now let's pay attention to sectors. And there's one sector that really stands out here. It's not industrials and it's not staples. It is healthcare, down 3.15%. I'm wondering if that's because of CSL. I'm wondering, I haven't actually had a look at CSL's share price performance for about an hour and a half. So I'm assuming CSL share price is down, I'm going to say 4 to 5%. Let's have a look. 4 to 5%. 5.32%. Share price has fallen below 260. This does not surprise me because as a shareholder, I went through the results and I was disappointed. That was my first impression, disappointment. And I think the market is disappointed as well. So I'll talk about CSL later in the video, and that is why healthcare's had a bad day. Now, maybe some other healthcare companies have had a bad day as well. So let's have a look. But by market cap, CSL is by far the biggest company here. Pro Medicus, the second biggest company, by the way, is actually up 2.52%. And a few other healthcare companies have had a bad day as well. Cochlear and Telix Pharmaceuticals, but they're much smaller than CSL. So healthcare sector in Australia is driven mostly by CSL. And we've seen that today. And by the way, industrials, good day today, up 1.15%. Why? Don't know. Let's have a look. Don't know. Pretty good day. The biggest company in industrials is Transurban and SGH. Of course, SGH. Really good results. Stock of the day, share price up 5.84%. And it is the fourth biggest company in industrials. And to be honest with you, yeah, most industrial companies have had a good day. I do or am trading one company or two companies here. Three companies in this list. Okay, let's turn our attention to, ASX 20. Shall we have a look at the ASX 20? Yeah, let's have a look at the ASX 20. Actually, no, the indices first. Gold, yeah, gold's had a really good day, up 3.15%. That's why I was a little bit confused, I suppose that's the right word, confused why resources was not up a lot. I just knew gold had a really good day. And so maybe some other gold companies some other mining companies have not had a good day. In fact, ASX 20 is down 0.27%. Let's open up and have a look at the ASX 20. So I'm thinking iron ore's had a bad day. Or maybe banks have had a bad day. Maybe. But I'm thinking iron ore. So 12 companies up, 8 down. And BHP, CSL, of course, CSL. Keep forgetting CSL, down 5.3%. BHP down a little bit. Banks are up. It's really because of CSL. CSL has been a drag on the market today. CBA down a little bit as well, and BHP has fallen as well. So really, it's been the day of CSL. If they had a good report, maybe the ASX 20 would have been up really good. I'll be honest with you, CSL is getting to a price where it's looking more and more interesting. But yeah, I'll talk about CSL later in the video. Okay, so let's turn attention to the top gainers. Always going to see a small mining company, probably being the top gainer, and today's no different. Mount Malcolm Mines, M2M up 57%, fairly low turnover. Look at that market, 5.32 million. Should I pay attention to any of these companies? I'm not sure. More than likely, they're drilling results. If they release anything, it could be noise. It could be, but it's not. No, this was yesterday, by the way. Golden Crown bulk sampling complete with high gold yields. Share price went down yesterday. Look at that. So this is the 6th day in a row where the share price of this company has either dropped or risen by more than 10%. So down 10%, down 11%, down 19%, up 30%, down 11.8%, now up 86.7%. This share price is this chart is just bonkers. Just a bonker chart. I have no interest. I have no interest in this company whatsoever because of this chart. Yeah, count me out. No interest at all. E79 gold mines, a nice turnover there, and they did release, I believe, it might have been definitely along lines of drilling results, but may not have been exactly drilling results. It might have been something slightly different. Let's have a look. New priority drill targets identified at Leverton South. So it's drill targets. So it's not drilling results. It's just drill targets they have identified. So it's not really drilling results. It's a little bit earlier in the stage. Let's have a look at the chart for this one. Maybe it's a little bit better than Mount Malcolm Mines. Could be a tongue twister, that one. And a lot of interest in this one, E79 gold mines. I probably talked about this the other day. I have no idea. I forget companies I talk about, particularly small mining companies, fairly quickly. This company, I did notice, did receive a price query. Yep, response to ASX price volume query. That's probably because the share price went up a fair bit. Actually, when did they release that? So share price went up a lot on the 7th, and they released this price query on the 7th. Yeah, who knows what's happening there with E79 or E79 gold mines. Now, what I'm doing here is just looking for better companies, bigger companies, non-story stock companies who've had a good day today. And I'm not seeing anything. I am not seeing anything in the percentage changes. So we have to turn our attention to, by the way, a company called Pro Packaging. Definitely not a high quality company. I think it is a real company. It is selling stuff, but Pro Packaging. So let's turn attention to best performing companies by market cap. Okay, SGH, stock of the day, up 6%. 9 entertainment company holdings. This is an interesting one. I am trading this company right now. Trading this one right now. And I have a feeling, and I try to find out what's happened. Did not release anything. I thought they must have released something. They must have released something today. Share price up 14%, but nothing. Will they get a price query from the ASX? But Seven West Media did release their results today. And I think the market liked these results. And I think what the market might be doing is, Seven West Media's had a good half year. And 9 Entertainment Group is probably the better of the two. So if Seven West Media's had a good half year, 9 Entertainment Group must have had a good half year as well. And that's all I'm thinking of. That's the only reason that 9 Entertainment Group share price has rallied today. That's it. So let's have a look at the chart. And why have I taken trading position in this company? It was actually looking a little bit negative. So share price did drop this time last week. Yeah. Share price went to about $1.40, then dropped back down to $1.28. It's not a lot. And then the share price has rallied today. So definitely this chart is looking way better. So why did I take a trading position? We had a crossover, moving average crossover, and looks like the share price wants to rally. I'm just going to get rid of the 200-day moving average. It's just based off the 100 and 225-day moving average, and it just looks pretty good. I just like this chart. Doesn't mean it's going to go in my direction, but if it doesn't, I'll just sell and then find another company whose chart looks pretty good. And then eventually I'll find a good one. It might be this one, it might be the next one, and then hopefully I'll hold that company for a year or 2 years or 3 years. That is the plan. So not all trades go your way, but this is definitely looking better right now. So 9 Entertainment Group, don't know why you're up, but doing good. Vulcan Steel, I'll talk briefly about Vulcan Steel. On the surface, their numbers look really bad, but share price is up 5.8%. So obviously the market liked it. Oh, Meeker Metals up again. 7 West Media's there as well. Bubs Australia doing well again. I don't think the Bubs Australia share price is really moving at this point. So for the final top gainer of the day, we'll have a quick look at Bubs Australia's chart. Yeah, it's trying, it's really trying, but just not there yet. We did get the volume spike when they released their Appendix 4C, and it was a pretty good Appendix 4C, but we're just not getting that interest at this point in time. Okay, let's turn attention to the top losers. Who is in this lot? YOW Group, share price down 30%. YOW Group, there was, I wonder if it's, yeah, here it is. I saw YOW Group mention in another company called Keybridge something, Keybridge Capital. I think it's KBC. Keybridge Capital, they've gone into voluntary, or yeah, gone into administration, voluntary administration. And what I found really interesting about this, I didn't realize at this point in time that YOW Group was a company that's listed on the ASX, but they mentioned here that, where is it? There was a debt they owed to YOW Group, and YOW Group said, please pay that debt now. And they just couldn't. It says it somewhere here. Yeah, here it is. On the 6th of February 2025, YOW Group formally demanded the repayment of interest outstanding under the reciprocal loan facility executed on 23rd of May. Okay, so it's only interest. It wasn't the full loan. And Keybridge says, nah, can't do it. We're going into voluntary administration. So that's on the 6th of February. I just didn't realize that YOW Group had some investments or something, or not investments. They lent out some money to Keybridge Capital. By the way, Keybridge Capital's biggest position was in YOW Group or something like that, which is not a good deal. Anyway, so YOW Group down 30%. And I'll be honest with you, I have no interest in that company. They sell chocolates and not doing a really good job at that. Fairly low turnover. What else do we have here? Nothing much. A few companies that had a really good day yesterday, Hydrix and EMU, down a fair bit today. We usually see that. We see that a lot. When a company has a really good day, either the next day or the day after, we see the share price drop a lot. And I do wait for that drop because it happens a lot. Doesn't always happen, but happens a lot. And if you really like Hydrix, by the way, there is a comment from Ibrahim. He apparently likes Hydrix. But if you like Hydrix, maybe today is a buy the dip situation. Other than that, nothing really here. Top losers by markup, CSL. There it is. CSL, Minres, Liontown, Clarity. Clarity did release something, but it wasn't, or didn't seem negative. So this could be just negative sentiment in the company. Drone Chill, share price now below 60 cents. Satire, according to TradingView, they were releasing their results. I saw Satire was down. I thought, oh, they must have released their results. They did not. Share price down 7%. And Cyclopharm down. Oh, this could be the buy dip situation. Cyclopharm. I've been tracking this one. And I thought, oh, there's been a lot of interest in this company recently. See share price take off. Share price has pulled back. And share price pulled all the way back to $2. And we have seen a little bit of buying coming in. So this could be the buy the dip situation for Cyclopharm if you're in. And I think that's the magic word there. If you're keen, an Intelligent Monitoring Group has fallen below 50 cents. I think that was a key level for this company. I have a feeling it was a key level, and it has dropped below that key level. Oh, no, it's 47.5. Mistaken. Sorry, I'm mistaken. For some reason, I just thought Intelligent Monitoring Group, 50 cents. No, it's 47.5. We'll say 47 cents. Okay, so let's turn our attention now to some of the interesting announcements, mostly financial results. So I've already talked about SGH, which is the stock of the day. Now, I'll be honest with you, I'll just quickly talk about it here. So share price up 6.1%. Their results did beat expectations apart from revenue. Revenue was a slight miss. And that was one, if I had to be picky with SGH's results, it was revenue, only up 2%. Would have liked that to be a little bit higher, but they have increased their EBIT by 10%, adjusted EBITDA by 8%. They've also increased their dividend, the interim dividend, by, what was it, 30%, something like 30%. And they also reaffirmed their EBIT growth for the full year, high single digits. So all that has combined for SGH share price to be up 6.1%. We have seen a little bit of selling, not a lot, I suppose a little bit, but the share price did reach a high of 53.25, but all-time high reached today. So things are still moving in the right direction for this particular company. So we've already talked about that company. Now let's move on to some other companies. I'll be honest with you, when I saw Seven West Media's results, I didn't linger that long. These were the first results to be released today. So because they were the first results, I usually open them up. And there's nothing much to see here. I'll be honest with you. It's an industry in decline. That's without doubt. They're searching for any sort of growth. They're searching for a way to grow their business. But the traditional way they have done business in the past is dying. They do mention revenue or total TV advertising revenue down 6% due to ongoing soft market and decreasing or lower amount of major sporting events or something like that. I don't know. Costs down 2%. EBITDA of 92 million down 26%. Net cash flow of 52 million down 25%. Net debt decreased 41 million to 260 million. That was one thing I did notice about this company a few years ago was the amount of debt. Anyway, so it wasn't my sort of announcement. And if this is not my sort of company, and it's because it's in structural decline. And maybe there is a future for Seven West Media, just like Nine Entertainment Group. And all they are to me are trading stocks. So definitely Nine Entertainment Group is not a long-term hold for me. It's just a trading stock. And eventually I will sell it. Now let's have a look at the chart for this one. And if I had to pick between the two, it'd be Nine over Seven West Media. Okay, and the chart actually does look a little bit more interesting. The chart does look a little bit more interesting. So we have Nine Entertainment Group chart looking interesting, Seven West Media looking a little bit interesting. And when I said these companies are trading stocks, if you have a look at the weekly chart, the share price of these companies have been overall going down. But there have been periods where these companies have been great trades. And a perfect example was Seven West Media from 2020 into 2022, when the share price went from about, I think a low was maybe 7 cents, 6 cents, all the way to a high of about 80 cents. That's a pretty nice return over a fairly short period of time. But overall, share price has been declining, and that's why these companies are not long-term holds. Well, there's many reasons why they're not, but that's one of the reasons. Okay, let's move on to another company. By the way, Seven West Media, or Seven Group, hold 40% of Seven West Media. That's one of the reasons why these companies release results at the same time. I'm pretty sure Kerry Stokes formed both of these companies. I could be wrong. I don't know the history of both, but I do know that SGH's managing director and CEO is Kerry Stokes' son, and his name is, what's his name? Something Kerry Stokes, like Ben Kerry Stokes or Brian Kerry Stokes. That's not right. Ryan Kerry Stokes, that's what it is, Ryan Kerry Stokes. Okay, let's turn attention to Vulcan Steel. Pretty sure this has nothing to do with Star Trek, but I could be wrong. I've noticed quite a few interesting name companies on the ASX, and I'm pretty sure some of these companies are homages to sci-fi movies, sci-fi TV shows, heavy metal bands, that sort of thing. And maybe Vulcan Steel is a tribute is a homage to Star Trek. Don't know. Anyway, share price up 5.44%. I have no, again, this is a trading stock. This is not a high quality company. So if you have a look at their half year results on the surface, you go, whoa, what bad numbers. Everything down big. So we're talking about EBITDA down big. We're talking about, 30, 40%. Profit down 64%. Dividend down 79%. And they're also mentioning a bit of weakness in the market. Or in fact, they call it variable and challenging. Yeah, challenging is all you need. They did mention things might be becoming less bad. They also mentioned, despite the headwinds, they did achieve a 10% return on capital employed. 2 thumbs up for that, yeah. But I'm pretty sure they did mention that things were looking a little bit better. Maybe somewhere. Outlook. Oh, yeah, New Zealand. The lowering of interest rates has boosted confidence for the future, even though general market activity has been subdued. On positive note, some segments and regions are showing signs of stabilization and recovery. So there is a little bit of positivity here for Vulcan Steel, but overall the numbers pretty weak. But I think the market expected it. That's why the share price is up. And the question is, do these results beat expectations? I don't have any numbers on that. I have no numbers on whether these results beat expectations. So based off the market reaction, maybe they were better than expected. Vulcan Steel, VSL, let's have a look at the chart for this particular company. That's the weekly chart. And what's in a, you can put this in a trading channel. You can put it like that. That's the downtrend. And if the share price moves above that downtrend, that's a buy. But this is a 3-year chart, and it's just like, no. Now, within the 3 years, you can see short periods of time where the share price does rally. Like, for instance, the share price went from 630 up to 820 not that long ago, between July and October. So I suppose you could trade that, but I have no interest in Vulcan Steel. But just because I don't have an interest doesn't mean you don't have to have an interest. We've got 2 more to go. CSL and Breville Group. Macquarie Group did release a trading update. Should not forget this one. Now, share price up a little bit. The one thing I took away from the trading update was not that positive. In fact, they said that revenue was going to be broadly in line with 2023, which means profit. Yeah, profit is in line with last year. So there's no growth. And I thought, well, maybe the market's expecting no growth, but this company is currently priced for pretty good growth. And when I say that, I mean the P ratio must be at least 23, 24. Let's have a look. According to CommSec, P ratio is 24. So that would imply that the market is wanting or needing some growth to justify the current valuation for this company. So when I say profit in line with previous year, I'm like, well, where's the growth? I think over the long term, this is probably a good play, but maybe not now. I don't like the valuation of Macquarie Group at these levels. So let's have a look at the chart. By the way, the chart looks really good, but the chart, if you're just trading this, maybe, but valuation does matter even for technical analysis. And the share price has increased from $156 to $232 in the past 15 months. The uptrend is showing no signs of ending. In fact, if the share price fell below this uptrend line, that is when I would get out if I was trading it. And the share price did reach an all-time high or long-term high about a week ago. So that's Macquarie Group. Chart looks pretty good, but the valuation is a little bit stretched, in my opinion. And what else? I could talk about Reckon. Reckon did release, this is a very small company. Maybe not very small. I'm probably not giving it credit enough. Share price down a lot. It's an accounting software firm. I first discovered this company probably in 2013, and I would guess they have not grown at all since then. And these results, I opened up very quickly, and I didn't see any return to growth. Not return to growth. I didn't see any growth. So revenue up 1%, EBITDA up 2%, profit of 3.6 million. So nothing much to like when it comes to Reckon. And by the way, the chart, I think it's not looking that great either. I have a feeling there was a takeover bid for this company at one point. I don't know. Chart's not looking good. Look, in fact, the chart looks really bad, the daily chart. Share price has dropped from 67 cents to 51 cents in the past month and a half. And I think that might be it. No, I completely forgot. A couple of REITs did release results. And even though we do get a lot of REITs reporting at the start of February, I will pay attention to those REITs. But once we get into the bulk of reporting, and we're now there, I'm paying less attention to REITs because REITs are not for me. Now, Region Group is a REIT and share price down 2.3%. But I noticed, so I won't pay attention to this one, but I noticed Charter Hall Social Infrastructure REIT up 8.53%. And I was thinking, what? A REIT up 8.53%. So something must have happened with these results. So I did search for it, did search for the possible reason. And I'm pretty sure it was Capital Brief who gave me a possible explanation somewhere here. Here it is. Charter Hall Social Infrastructure REIT gains as it upgrades guidance. And this wasn't guidance as in financial performance. It was distribution guidance. So they've increased or raised their distribution guidance from 15 cents to 15.2 cents. Yes, that sort of raise in guidance can lead to an 8% increase in share price. So maybe that is why the share price has increased, but don't know. But it's really interesting. And maybe this should have been the stock of the day. I have no idea what they own. So social infrastructure for me would mean daycare centers, healthcare or hospitals, stuff like that. And by the way, the chart, even though the share price is up 8% today, the chart it's close to a breakout. Last time share price was as high was in October. So we are at a 3-month high, barely, but I just don't like this chart. And I just don't like REITs. Don't like REITs. I'm just trying to see if I've got any notes on it. So there's, in fact, these notes, there's no reason. They give me no reason why the share price is up. They do mention acquired a pathology laboratory in Perth and divested some childcare assets. 11.9-year WALE, which is weighted average lease expiry, 43% of income subject to market rent reviews in the next 4 years. Anyway, now on to the main results apart from SGH, and that is CSL and Breville. I think I've gone through everything else. Yes. CSL and Breville. We'll start off with Breville. I am a shareholder of both companies. And when I saw Breville, by the way, in earnings calendar, trading view earnings calendar, Breville was a miss. Slight miss in earnings per share, but a beat in revenue. Yeah, beat in revenue. Earnings per share miss, beat in revenue. But there was one thing I did not like about Breville Group's results. So let's have a look at that. The rest of the results were pretty nice. We'll have a look at the media release. And the results were really good. I like these results. So revenue up 10%. Oh, by the way, the valuation of this company is quite high. So P ratio is about 40, I think. So this company needed really good results to sort of justify the current valuation. But I thought these results were pretty good. So revenue up 10%, gross profit margin stable, EBIT up 11.5%, EBIT up 10.5%, profit up 16.1%, and dividends up 12.5%. I looked at those numbers and went, that's pretty good. Return equity, 14.7%, so slightly down, very slightly down. So that's not a massive concern, but I would prefer return equity to be increasing and not much debt. So net debt to cash, 55.1. But the one thing I wasn't a fan of, so we had these, growth of greater than 10%, so between 10 and 15%, but they did give some guidance. And I am going to, I think the guidance was right at the end. Here is, financial year 25 outlook, and it's the bottom, a lot of uncertainty. I have to give Breville Group this. They are mentioning there's a lot of uncertainty, tariffs, that sort of thing, and maybe their guidance for financial year 25 EBIT is really conservative. And if it is conservative, this is a route to go down. And that means an upgrade is more likely rather than the really bad downgrade. You don't want to release a downgrade you prefer to have conservative guidance and then release upgrades. Anyway, they expect to deliver EBIT growth of between 5 and 10%. Now, this guidance assumes a few things: no significant changes in the economic conditions, no material supply chain interruptions, and the group's expected second half investment levels into marketing, R&D, and technology. So they are making some assumptions. So there could be a downgrade. So if some of these things happen, like significant changes in economic conditions and supply chain disruptions, maybe EBITDA growth or EBIT growth will be less than 5%. So maybe they're not being conservative. I don't know. But I expected that to be a little bit higher just because of the half-year numbers. Maybe I'm just being a spoiled brat, but I don't know. Anyway, so the market was not enthusiastic as well. So I sort of can understand. It's good when the market is aligned with your own thoughts. But by saying that, share price has been a beautiful uptrend. Valuation is quite stretched. I've been thinking about taking profits. And when I say take profits, sell half of my holding of Breville and keep the remaining half. And the whole reason is I think the valuation is a little bit high or too high than what I like. Now, we have seen the one-day candlestick's not that bad. And if we have a look at the one-day, not the one-day, say the 5-minute chart, we're probably seeing, the low of the day was on open. So I do like how the share price has bounced. There was a nice, really big bounce at 11:35 a.m. Something happened at that point. So it's really good that the low has been reached on open. That means initially the market did overreact, and more than likely it's retail investors. Okay, now on to CSL. And I'll be honest, this report did disappoint me, and I'm not shocked. The share price is down 5%. I expected a little bit more, but in saying that, they have not changed their 4-year guidance. That's the most important thing. So even though I'm not surprised the share price is down, I'm more likely to be adding CSL shares than selling CSL shares. So I expect a little bit higher numbers or a little bit higher growth. So revenue up 5% at constant currency, NPAT at 6%, and at constant currency, it's up 7%. So we'll do constant currency. So profit up 7%, profit after tax and amortization up 5%. Net profit after tax and earnings per share. Why can't I just have one metric? Anyway, $4.36, up 4%. Interim dividend of $1.30, up 16%, once converted to Australian currency. So that's a nice little increase in dividend. So I went through those numbers and I went, I think the market might react negatively to these. But they also mentioned that they have not changed their forward guidance somewhere here. There we go, outlook. And they're talking about how the underlying businesses are robust. For financial year 25, revenue growth is anticipated to be approximately 5 to 7% over financial year 24 at constant currency. And I'm pretty sure, where is it? NPATA, between 10 and 13%. That's the one I was looking at. NPATA is expected to be 10 to 13% higher than financial year 24. And that's no change from their previous guidance. So no change in guidance. So this is a case where the market's a little bit disappointed in the numbers, and maybe the market is not trusting that CSL can get to those expected NPATA numbers or increases of between 10 and 13%. But if they can hit it, I think the share price right now and the valuation of the company right now is quite attractive. Okay, that's it for the top announcements of the day. Some interesting results, including CSL, Breville, and I suppose SGH. Few of your comments. Got a little bit of time on my hands. Ibrahim's essay, bow. Hydrix looks interesting. Given it has 40 meters in contracts in the pipeline, its market cap is only 7 million. Buying on the dip, maybe. I've just mentioned that maybe today is a buy the dip. I don't know anything about this company. That's a problem. Share price is highly volatile. I did have a quick look at their announcement. What was it? Was it FDA approval? For some reason, I'm thinking FDA approval. Is that right? My memory is pretty bad sometimes. FDA clearance or FDA clearance. Guida Surgical secures FDA clearance. I did have a quick look at this and I was like, okay. Share price down 20%. So is this a buy the dip situation with Hydrix? So if you have a look at the daily chart, share price is just all over the place. I would say this is more of a plaything for day traders. They're loving this right now. Share price has ranged between 1.4 cents and 3.2 cents, and it's been 3.2 cents twice. It's gone from below 1 cent to 3.2, back down to 1.4, back up to 3.2. Day traders will be loving that. Not for me, too much of a story stock, and I probably have to need to understand their technology before I become interested. And that's a big leap for me because I'm usually quite skeptical about new technology. Anyway, that's Hydrix, but just because it's not for me doesn't mean it can't be for you. And maybe this is the beginning of the amazing story that is Hydrix, that eventually will be 5,000 pages long, and in 20 years' time, Hydrix will be one of the biggest companies on the ASX. Who knows? Maybe this is a start of that journey. Nice 007420 says, any comments on Peloton? Is that the cycling thing? Stock on Nasdaq, ready to break out. Is that the cycling, the big hype stock during COVID-19? Everyone was subscribing to Peloton to ride bikes. I could not think of anything more boring, to be honest with you. I don't even like running. I like running. I prefer running over cycling, and I can't run on a treadmill. It just drives me insane. I would never go to gyms to ride bicycles and run on treadmills. I'd probably only go to gyms to lift weights. Anyway, Peloton, I'm pretty sure that is what I'm talking about. Is this breaking out? Well, I'll be honest with you, it broke out back in August. In fact, it broke out. Here it is. This is a beautiful breakout, by the way. So 22nd of August, it broke out. Share price on that day rose 35.42%. But the most important thing is what happened after that. You can see share price go sideways for a fair bit of time. I love that setup. I really love that setup. And then the share price just zoomed higher after that. It's not Zoom, this is Peloton. So wrong company there. Anyway, and they must have released results recently, it's 6th of February, and share price did go up 12% after a bit of a pullback. I do like this chart. I don't mind this chart at all when it comes to Peloton. But yeah, have a look. Share price went to a high of $170 back in early 2021. Now it's $8. Yeah. So don't fall for the hype sometimes. Ready to break out? Yeah, I think it broke out in August. That was the true breakout. Happy Now always likes to leave some very long comments. This is an interesting one. I did have a read this earlier. For some reason, Happy Now loves the way I say horribly. I don't even realize I say that sort of thing. Anyway, so Happy Now went into JB Hi-Fi. Yeah, and that is what's his name does all the time. Well, used to do all the time. Peter Lynch. This is the sort of thing Peter Lynch would, and I would say Peter Lynch, even though he has a shorter investment lifespan than Warren Buffett, his lifespan as an investor or fund manager is probably the most impressive we've ever seen. It was a short period of time, and then I think he just went, nah, why am I doing this anymore, and got out. Warren Buffett he's got longevity. Peter Lynch had the results. Anyway, Peter Lynch would love you going to stores to check it out. Anyway, what do you call it? Scuttlebutt or something like that. I forget what he called it. Anyway, so Happy Now went into JB Hi-Fi, and I mentioned the other day that I was listening to a podcast, and on this, I haven't been to a JB Hi-Fi for years, I think. I haven't been to JB Hi-Fi to buy anything for years. I might go in just to see how busy it is. I do like to do that sort of thing and just have a look at what they're selling. But I've not bought anything JB Hi-Fi for a few years. And someone mentioned on the podcast that what they're selling now is more expensive, way more expensive than everything except Harvey Norman. So Harvey Norman traditionally has the most expensive stuff. So why would you buy anything there? But you can buy stuff at Kogan, Amazon, much cheaper than at JB Hi-Fi. And Happy Now sort of backs that up. Went in last week to buy a computer, hard drive storage, and an AirPad. I bought a hard drive storage the other day, straight from Amazon. Get it delivered, cheaper, yeah. And an AirPad, walked out with nothing. My previous visit was full of middle-aged and kids hustle and bustle, picking up things, hardly anywhere to walk. Well, that is a positive. If there's a lot of people, that's actually a good sign. The items I'm looking for had gone up in price and were no cheaper than me going elsewhere to full price store. Yes. So that is something I've heard. Might as well walked up into an Apple store and someone would actually talk to me and asked me, can I help you? In fact, when I bought an iPad many, many years ago, that's what I did. Went into Apple Store, bought the iPad. Yeah. So I actually would prefer to go into Apple Store than JB Hi-Fi. But anyway, Talaniyaya says, can I do an update on Macquarie Group? Maybe. We'll say maybe. Bill Walton has done some calculations, and Bill Walton has Kogan bouncing up bigly off 430. I was actually looking at Kogan the other day, and when I say the other day, I think it was last night, and I was thinking, ooh, is this in store for a nice bounce? So we're on the same ballpark here, Bill Walton. The reason I was thinking that is because share price has dived a lot. So I would think this is oversold, and the share price is getting to a nice little support level, or support zone, we'll say. That support zone is between $4 and about $4.50. It's at $4.44 right now. And let's just have a look to see if it is oversold. Would not be surprised. Relative strength index. It is oversold. Yes, oversold. But you can see last time it was really oversold was back in April of last year, and the share price just kept on dropping. So just because it's oversold doesn't mean it's going to bounce. But I wouldn't be surprised to see a bounce here. And honest with you, when the share price did drop a lot in April last year, that was a really bad day. Share price dropped 27% and just kept on dropping. And yeah, I don't know. So this is not for me at this point to trade. Not for me at this point in time. StratVest loves this time of year too. Kneppy, yes, Kneppy. Kneppy. Trader Hooper says, City Chic, one of my stocks of 2025. Good gain today. Nicely done. Hillgrove started to move up after recent consolidation. Well, have a look at both of these. So, yeah, I did choose City Chic because I think maybe the low has been reached. And I was thinking, well, if the low has been reached, 2025 could be quite good for this company. And, the chart could be heading to a good place. The chart could be heading to a good place. Not saying will, could be heading to a good place for City Chic. All they need to do is release something positive again. They've released something positive recently, and they need to do it again. And I think possibly, just possibly, sentiment is starting to shift for City Chic. And Hillgrove, coal prices are on a tear. So Hillgrove resources should be on a tear as well. Let's have a look. Up almost 10% yesterday, up another 2% today. But share price still in a downtrend. So even though copper prices are going on a tear, we're not seeing a likewise similar reaction for Hillgrove resources. And that is a problem when there is negative sentiment. Negative sentiment can do weird things. Negative sentiment can keep a lid on the share price increasing. And Mary Ann Dylernia, thanks Kneppy, indicative. Oh, here. Yes, we're in the closing auction. So we have a look at CBA. Let's have a look. No, we'll have a look at CSL. Oh, it's going to be closed. The indicated price. Oh, yeah, there it is. Indicated price. Looks like it's going to drop a little bit during the closing auction. Closing auction should be finishing any second now. Any second. Always love the closing. It should be any second. There's a little window when it closes, and it should be any second. There we go. I'm right. See, I'm right 91% of the time. Anyway, so thank you for that, Marianne Delernia. Just James Dean says, did anyone catch DTL Data 3 sudden collapse and recovery? That's an easy 18% in 3 weeks. Let's have a look at Data 3. Oh, yeah, look at that. That reminds me of GQG. So really negative announcement on the 17th of December. Share price down 10%. Share price kept on falling. Not a good sign. And then for some reason, share price has bounced. Not a lot of volume on the bounce. So that could be described as a dead cat bounce. It could be, I don't know. This is interesting bounce. Very interesting bounce. But I'm not trading this. Not trading it. Not for me. Okay, that's all I have for today's video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.